So let's introduce our speakers. First up, we have Michael Chin. Michael is the Managing Director and Global Head of Trading at Refinitiv. Refinitiv, as many of you already know, was formerly the financial and risk business of Thomson Reuters. Refinitiv is one of the largest providers of financial markets data and infrastructure. To learn more about us, please go to refinitiv.com. Also joining us today, we have Kevin McPartland. Kevin is the head of market structure and technology research at Greenwich Associates. A bit about our partners at Greenwich. They are the leading global provider of data, analytics, and insights to the financial services industry. To learn more about Greenwich, please go to greenwich.com. And I think we're ready to begin the presentation. Take it away.
Great, Trish. Thank you very much. Kevin, it's really great to see you.
Yeah, great. Thanks for having me on.
Absolutely. I know that we're in just unprecedented times, but it's really good to be able to interact and catch up and really just dive into these great reports that you guys partnered with us on. We've been working with you for the past 12 months, off the back of, some really insightful questions that you asked across a broad and diverse group of financial services institutions. And, through those reports and those findings, and together with, Greenwich's vast insights to, what's going on in the market, we were able to assemble, these three reports, which have given us, incredible insight at Refinitiv to, continue our journey to develop what we believe is really the future-proof trading platform and solution set to both the buy side and sell side. So maybe I'll just let you just cover a little bit about what these reports were about, and then we're just going to go deep dive and sort of catch up like we normally do.
Yeah, no, that sounds great. And thanks. It was really great working with you guys on this. We sort of last year we went out to over 100 financial market participants of all types. So we talked to fintech employees, we talked to buy side, sell side, exchanges, clearinghouses. We got a little bit of everybody to chime in. Everybody's views are a little bit different to really understand sort of what the role of technology is playing, like how the trading desk is transforming, not just that, but also how it's transforming people's careers. And of course, when we started this last year, we never could have imagined what the state we'd be in now as we were sort of doing this webinar and releasing the final of the three reports. On one hand, everything has changed, but on the other, if I think through the findings, the sort of the generally positive influence that most in financial services field technologies had on their careers and their jobs and their day-to-day, if anything, I would have to argue that those results would only be enhanced. And we're going to get into that a little bit as we do some of the poll questions and we start to talk about the findings. But the fact that we are having this conversation now with hundreds of people around the world and being able to see each other is a testament to, how technology has transformed this industry. So excited to talk about that.
Yeah, no, absolutely. That's going to be great. And to that point, we'd like to encourage the participants here to, respond or, participate in these polling questions. As Ken said, this is going to be really interesting. We have this very, very, horrible pandemic going on in everybody's lives. And I'm hoping that everybody on this call and many of our colleagues and friends, are staying safe and staying healthy throughout this. But this does give us an opportunity to see, the impact of this as we, continue to go through this, as we're all working virtually, as the markets, the volatility in the markets are unprecedented. And so we encourage you to participate, because then we will be able to use as context the same results that we had, as Kevin said, almost a year ago, and see what the differences look like and maybe validate that hypothesis that technology is even more relevant than ever. So,
yeah, Michael, can I ask sort of on that note, can we just before, and we'll jump in and curious to see the response to these first questions to give a feel for who's on. But Refinitiv you're a gigantic financial technology company. You have software running on tens of thousands, if not hundreds of thousands of desktops around the world. So what has this transition been like, both for your team and your employees working from home, but then your clients working from, those however many of those desktops are means that many endpoints, right? As opposed to just a smaller number of offices. What has that been like?
Oh, I mean, it's been really satisfying in a strange way, given everything going on. Because one, thank goodness we incorporated Teams into our, into our internal workflows. I guess it was about a year ago. So everybody started really getting comfortable with using it. So I mean, you could imagine that is our gateway into connecting to our employees and even our clients. So everybody's doing that. We have 20,000 people at Refinitiv, of which I understand, 95% are working virtually. And we did that, I mean, in record time. I was just amazed how quickly that happened. And how we focused on, first and foremost, the safety and well-being of our employees, and then the reach out to our clients. But the things that we're seeing as a technology provider is significant more increase in usage across everything we do. And that shouldn't be a surprise. I mean, people are really, gravitating towards, the hosted solutions that we have. And we'll talk a little bit about the data usage. It's just off the charts. And then the desktop, our flagship desktop icon, people are using it. We're finding more and more demand. We're helping our clients get set up in virtual environments. It's really about making sure our clients can connect to the markets and, and do their jobs in a very, very unprecedented time.
Yeah, that's fantastic. And I know I've been looking at my my icon monitor, watching that volatility more than I ever have. So kudos to that. Sure, and if everybody could go ahead. Sorry, go ahead.
First polling question. Yeah.
Go for it.
Yeah, so if everybody could
go on.
Fill that out, that'd be great.
Yeah.
Great. So
and we'll give it a little time.
Yep, absolutely.
I think this polling question is interesting because everybody on this webinar can get a sense of, the participants, where they're coming from, what generation they are. Of course, in reports that we did, that was one of the questions that we asked as well. So as this thing is, coming to being, we'll talk about this, but it's a good mix. It's a good mix. Kevin, if I go back to the original poll that we did back in April, we had 27% millennials, 47% Gen X's, and 25% baby boomers. So, yeah, we're getting a slightly different mix, which we can sort of say, hey, that's great. I mean, a nice even mix between millennials and Gen X's. So, very good to see. Thank you.
Yeah. And it'll be interesting to. Sure, go ahead.
Sorry, Ken. I just want to move on to our next poll.
Yeah.
10 key findings. Let's move on to our next polling question as we drive our conversations forward. Is your firm currently using AI and machine learning techniques in the trading process? And we will get to those poll results.
Great. So while we wait, and I can talk a little bit about, so what we found. So the response rate in the study about AI was very positive, right? Both looking at how many firms say they're using it, how many firms expect to use it more. And when we ask people about sort of technology that will be impactful, broadly speaking, right, AI was right up at the top. It's interesting, right, because I know sort of as AI is really sort of become, much more buzzy in the last 2 or so years. There's certainly a lot of debate as to what that really means. Is it machine learning? Is it AI? Is there really a difference? What should we know? Is it being used in marketing, but it's not really AI if you ask a real technician? So there's been some debate there, but I think it's inevitable that AI is real. This is not science fiction anymore. The fact that every single time you type a Google search, really what's going on is unbelievably sophisticated artificial intelligence is helping you to find what you're searching for. And that is getting its way into financial services. So I don't know, Michael, what have you been seeing that you guys are creating, that your clients have been using, that feels real and is sort of pertains here?
Yeah, no, I couldn't agree more. I mean, the findings from the poll were overwhelmingly, yes, we are using it today, or we plan on using it in the near future. We have a group within Refinitiv called the Labs Group, and their sole focus is really around innovation and adoption of new technologies, and then putting out POCs and developing products that then utilize these technologies for our clients. We did a poll about a year ago as well. The Labs team reached out to 475 participants, clients, and people that really weren't clients, but we found a very similar result. In that, I'm just going to read from it because I think it's interesting. 78% of those 475 interviews came back that they are utilizing machine learning as a core component of their business strategy. And 75% came back saying they are making significant investments in AI, machine learning, and but they also said that the biggest challenge they have is not necessarily the algorithm, it's the quality of data going into that algorithm. It always sort of comes back to data, wouldn't you agree? I mean, you'll have bad data going into it, it just doesn't produce the results that you're...
Yeah, I mean, garbage in, garbage out is sort of old and cliche, but it still remains very, very true. And I think that's partly why AI has started to become more useful, right? The world, but then financial services in general, has collected and now has access to so much more data than it did 2 years ago or 5 years ago, that it's making artificial intelligence more useful, more accurate. And then if we sort of continue on from there, right? So part of the reason why we have the ability to leverage that data is because it's available in the cloud for the most part, right? So terabytes and terabytes of alternative data. Some of the really fascinating, albeit scary sometimes, information that's come out over the last 2 months about the pandemic has been driven by by alternative data, and that. And that's a real sort of, helpful use case for not just finance, but for the world.
Yeah, no, I had a good, an interesting conversation with the CRO of one of the satellite imagery companies. And what was interesting, so we use them in our commodities trading business, where they're really helping us to gain insight and our clients insight on supply chain as they're, looking at, shipping and, agriculture, sort of, fields and all that other very cool stuff. But he said that actually, as the pandemic has gotten sort of worse and worse, they are now getting a lot of government contracts to work with the government on, imagery that can help them understand sort of the pandemic better and the patterns and where there are hotspots. So, to your point, it's unbelievable.
It really is incredible. And actually, I can use it a good segue. There's a question that just came in about sort of the need for traders to interact sort of physically to construct a view of the market, and now everybody's working remote. I think it's important as we talk about artificial intelligence that there is no doubt a human element. I think a lot of the technologists are working to program that human element right into the artificial intelligence, but I think there is, if it's not just human intuition, but human nature to interact, to want to speak with somebody, that it's not one or the other, right? That it really is one complementing the other. And so as AI gets better, it's not that it's displacing people so much, it's allowing the people to then maybe focus on the next thing, right? Or the next value-added thing that maybe they didn't have time for in the past.
Right. No, and so when you ask sort of some of the things that we're doing at Refinitiv to really incorporate this, we have a project that we've released to 4 clients so far. And it's called Mosaic. And what its intent is and what it's doing is, really what, me as a trader in my sort of past was always sort of getting screamed at by, other more senior traders on when there was a big, significant market move, it was sort of like, well, tell me what's going on. How did that happen? Why did that happen? And what Mosaic is doing is it's taking the vast amounts of data that we have at Refinitiv, including alt data, and looking for those connection points and getting smarter about it, because it's incorporating machine learning to be able to take that data, make a sort of a view on, what parts of that data might have influenced that spike or that big change in the market, and then feeding that back either through an API or through visualization tools on our desktop to be able to give the traders insight to why that move happened. What were the things that influenced it? Was it, social sentiment? Was it a news story? Was it something that came out that we even have access to the legal filings from, our sort of, sister company, Thomson Reuters, and their legal department. So we can assemble all of this. And, also the machines get smarter and smarter, because they then, if a move happened, they can then go and further validate that afterwards and see if, in fact, that was a result of X. And if it wasn't, then they sort of feed into some learning so that they have a better, view of it next time it comes around.
Yeah, it's fascinating. It's a perfect segue right into the next finding, right? That trade performance analytics was seen as one of the most impactful short to medium term technologies. And I think that's it's like you said, it's okay. Now we have data. Great. Now artificial intelligence is real and we have people that know how to program it. So what do we do with that? And this is a big focus, right? I think even though there's a lot of talk about sort of AI in execution algorithms, it does seem that more of the work, to your point, right, is about research and trade analytics, both pre and post trade. And then, to sort of tie that back into some of the other findings here about technology in the long term, risk and security, right? Same thing, right? It's about pouring through tremendous amounts of data, trying to find patterns and signals.
Yeah. I mean, I love this finding because it really validates, what we're doing as well. I mean, trade performance analytics has really stretched beyond post-trade. And actually, post-trade, other than being able to, demonstrate best execution and satisfy some of the new regulatory, things that we have to do, especially in Europe with MiFID II, but best execution has always been an important part to also validate if a trader is actually adding alpha or value. However, we're seeing significantly more demand on the pre-trade and, in fact, at trade or in trade. We're incorporating that capability so that it's not just, okay, I did okay, I traded well, I hit my sort of mark, I can prove that I did some best execution, but more importantly, how do you get that best execution through insight pre and during the trade, where you can, effectively course correct your trade and your algorithm as you're getting, real-time feedback on performance. So that's really, I think, the focus now. Post-trade is, so 20 years ago, and it's really about, giving you that insight before you even trade so you can make the best trading decisions.
For sure. And Mike, your segues are spot on today, right? So the next big finding was about sort of thinking we looked at the responses of just the traders and what technology really was most impactful for them in the short term, and EMS was right at the top of the list. We have a quick poll question if folks can respond while we're talking, right? Is it, are you looking for sort of that front to back solution supported by the data, or is it, trying to do the sort of choose my own, create my own solution? So if everybody can fill that out while we speak. But yeah, so it's funny, right? The, EMS, I started in this industry in the late 90s. And supported what really was an execution management system at JP Morgan that they had built in-house back then. So on one hand, it's not a new concept, but on the other, the systems of today are nothing, not even close to what they were like 20 years ago, right? FIX barely existed in the late 90s. So, what are you seeing? What are some of the new features that customers are using and liking? What's cool in the EMSs today?
Yeah, no, I had no idea you were at JP Morgan.
Yeah,
wow,
yeah. I was equity tech trade support in the late 90s. That was my first job out of school.
Okay, so we might have crossed over. I didn't know you at that time, but that's very cool. And yeah, I grew up in trading as well, and at J.P. Morgan, I date many years back then, and late '80s, early '90s, where EMS really didn't exist. What are we seeing in EMS? I mean, first of all, we've taken a very aggressive stance, as you know, and you guys have sort of been on that journey with us, where we felt to accelerate our capabilities to deliver solutions to the buy side. We decided to go full on, acquire some fantastic assets. So 2017, we acquired Ready, which, as you know, was owned at one point by Goldman, and then it spun out with a consortium of other brokers. And we just thought, wow, it is really a capability that we need. It accelerates our position to be able to have a full-blown EMS. And so we acquired that. But I also felt that, the EMS and the OMS and the PMS are starting to sort of blur, right? And the advancements in the OMS, PMS, really about delivering these capabilities as a fully hosted solution. So we acquired a company called AlphaDesk, which is based in Toronto back in July of last year. And we've just had an incredible response from our clients in that, they really are looking at the capability of OMS and EMS and PMS together. We fully integrated these. We now have Icon as really that pre-trade capability. So this end-to-end solution, I think, is really what we believe is important. But that has not changed our view that still we need to be open. We need to be able to partner, as we continue to do, with all the OMS players, and in fact with other EMSs, because you want to offer two things. You want to offer those clients that want to, do best of breed, and then you also want to offer those clients that are looking to streamline. And one thing along that lines, and we actually took some of the data that you guys produced, I think it was a few years back, if you remember, where you, talked to your clients and found that the number of vendors that clients are working with are coming down. I mean, there is a lot of vendor rationalization going on in the market, and I think, that might be a TCO play, but it also might be the fact that, it's simplicity. And I don't know if you have any comments on that, but I remember that that find a few years back from you guys.
Yeah, I mean, I remember looking, if we look back, a decade, the number of EMSs on an equity trader's desktop could have been 6, 7, right? Now it's, I think our official number is, 1.5, right? You have basically a primary and a backup, because it's, on one hand, it's too much to manage, and on the other, everything can be integrated into one screen. So yeah, I mean, on one hand, I guess part of it is that there has been a lot of consolidation in fintech over time, right? There is certainly a scale play there to be able to provide, more tools, better service. The option, as you point out, right, the option for front to back, not necessarily the requirement, but the option for a full front to back solution, which can be, really beneficial to a lot of firms. As well. But what's good to see, and I'm sure you see this in your seat at Refinitiv, is that the startup community, and let's hope this continues despite what the economy is going through now, but the startup community has been so robust. There's just been, so much fascinating innovation. And, sometimes we have, the startups encouraging the large firms to up their game, but then you also obviously have the large firms upping, pushing the startups to up their game. And that's how the market's supposed to work. And really the end users see so much benefit from that competition over the long run.
Oh, I couldn't agree more. I mean, the ecosystem is getting so robust, and it really is symbiotic now. This is just that whole, thing that, technology is leveling the playing field for so many people. The other thing that we're seeing, and I know that you guys have produced a number of reports on this, is really the move to truly multi-asset trading on an EMS. Once again, the fact is, as you said before, people had multiple EMSs sometimes because they needed to trade different asset classes. And as you have seen the foreign exchange market effectively become as liquid and as tradable and as fragmented as, equities and futures markets, you're starting to see that in the fixed income markets. So demand that we are getting from our clients to deliver those capabilities that's probably the biggest thing that we're seeing is really the cross-asset trading.
Yeah, you're right. I mean, so the fact that there is different functionality needed in different asset classes. To your point, FX, fixed income equity is very different. Order management, execution management, portfolio management, again, can be very different functions. But the way the technology has evolved, that you don't need a full separate sort of piece of software to do those things. What we now have are sort of very targeted, efficient software that can be customized. So if you are an equity options trader in the U.S., or you're an FX trader in Europe, you can still be using the same piece of technology, but it is sort of properly customized for you. So to segue there, right? So the other key finding is about data, right? Which isn't surprising. We've already talked about it. I think when folks ask me or my colleagues at Greenwich, what are some of the big things we're seeing? It continues to be the data story. It's pervasive across every asset class. Front, middle, and back office. There's just so much more of it. And the market participants, the fintech providers, everyone we spoke with really sort of saw that and pointed to that. So obviously that's a sort of a core of your day-to-day, right? For looking at data and data quality.
I mean, it's unbelievable what we're seeing going through our platform. So over the past month or so, given the market volatility going on, we've seen an increase of 60% of consumption, of usage of our data. I mean, it's just skyrocketed. But I think what's even more fascinating is that, it's not just the data, it's the number of updates that are going through, once again, because of the volatility. So we've seen spikes of upwards of 175 million messages going through our platform. And you compare that to sort of the average of last year, which was around 60 billion. I mean, it just gives you some a reality check on what's going on. And just sort of on those that data story, we're seeing significant increase year over year on the number of instruments that we need to support as more and more markets go electronic, as venues expand their instrument sets. So we're now upwards of 95 million instruments supported on the Refinitiv platform. And, it's growing by 15-20% year over year. I mean, it's just phenomenal. Oh, and then I'm just full of data points. I just have to share this one because I found it somewhere. And we will produce, not us, but the market will produce more data in 2020 than we did from the beginning time to 2003. So I mean, unbelievable.
It's incredible.
I just can't get over those numbers.
It's incredible. And I think I've said this on, every webinar I've been on since this crisis started. It's just incredible how well the industry, the infrastructure has held up, right? The exchanges, the trading venues, data providers. I mean, we're talking about sort of, days of volatility and volume like we haven't seen since at least 2008. And often, volume in treasuries, in FX, in futures, some days were, records of all time, $1 trillion of treasuries traded, over a week early in March. It's just amazing that despite some, economic pricing dislocation, the infrastructure held up, right? There were no major outages reported, even as, oil went negative and all sorts of other, seemingly crazy things happened. The market held up, the data kept flowing, the analytics kept going on. It was just really just amazing.
Amazing, because all this was happening as, the large majority of people are working virtually. I mean, think about that.
Right. I mean, on top of, you're right. All that data was streaming through, suburban, cable and Wi-Fi, right, to make it even more amazing where the technology has gone.
Wow.
So I believe this question up. People can respond here. This continues to be fascinating and something that's evolved, and it's in relation to this talk about data and technology, right? So what skills are necessary. Yeah, I guess, I wonder, so Michael, when you're hiring on your team, and obviously you are a technology company, but you have salespeople, you're interacting with traders, like, has the skill set changed for you? Like, what matters to you when you're looking to hire folks?
Well, what matters first and foremost is diversity. And really what it comes down to is diversity of thought. Yeah, I am such a big fan, and that sort of was something that I was instilled in me, when I joined JP Morgan, back in the late 80s. And I was a person who had a computer science background. And what I noticed when they hired people, even back then for their finance program, they sort of put you through a year of basically getting an MBA. I mean, the people that they hired were just so diverse, whether it was technology people like myself, philosophy majors, music majors. I just couldn't get over it. But the point being, you have to bring people in that have different ways of solving problems. And the only way you do that is just having people that come from different backgrounds and different skill sets. So with that said, though, I look for people that first and foremost bring that. But, I don't think there's a person that you don't talk to that you want to assess, what is their analytical and sort of their technical prowess. That is really important. And then there are people that we hire, especially as we, hire directly from school. We really do look at people who come with, strong data analyst backgrounds and things like that. So that's, but, you can't replace also people that just come from the market and have had that experience. And I think we often believe that, you can bring smart people out of school and teach them this stuff. But, speaking as somebody who's been in the market, I guess I am a Gen Xer, but you can't replace experience being in these markets so long.
There you go. That's like you and me, two middle-aged guys can say you need experience. So I think the other thing that really comes through, right, is
I think so far, though, I'm sorry to cut you off, Kevin, but it looks like our viewers here also feel the same way, market knowledge, which is different than what the respondents were when we did the study back in April.
Well, you see that data analysis down there still did win the day, right? Which I think is still telling.
Oh, I can't see this.
Yeah, you got to scroll down a little.
My bad.
But you're right, though. The market knowledge still was higher, and I think that is, it is interesting, right? I think sometimes people almost feel like it's table stakes and ignore it. But the fact that data, has now sort of for the last few years consistently always come sort of ahead of market knowledge is telling, because I'm sure. When we were both sort of coming into this, it was not about, it was certainly not about data analysis when traders were getting hired.
Yeah. Yeah, very interesting. Where are we next on this? I'm sorry. This is very small and my eyes are really bad. So.
Oh yeah, no worries. So I mean, we really covered a lot of this, right? So we talked about data. Really, the next finding was about sort of analytics to make some use of it, right? And we did get into that quite a bit, right? So data's great, but if you can't make any sense of it, and that does seem to be a big part of what has sort of really transformed in the last few years, is that data pile, as you pointed out, right? How fast it's growing. Now we're at a place where we really can do something with it. So here it is, right? Data analysis is the most important skill for the trading desk of the future. Our audience still continues to agree. There's a little bit of a proof point that despite the craziness of the last 2 months, some things really still haven't changed. But what does that mean if, somebody brought up in the question from the audience about the interaction with humans? There's obviously a client interaction that's still key. You can be the best data analyst in the world, but in times of stress, and we saw this in our analysis of both the corporate bond and the U.S. Treasury market, that even total volumes were up and total electronic traded volumes were up. From a percentage basis, voice trading actually grew, right? So when times get stressed, people do still want to talk to somebody. So I don't know, how do you think those two things play together, that data analysis skill, but also that sort of, sales, human interaction, sort of old-fashioned?
Yeah, well, I think it comes back to the beginning of our conversation, the conversations between people talking about the market and insight is absolutely still something that people will do. I don't think that will ever go away, but the conversations are going to change. I think, for example, the smart desktop that I talked about that we're building with Mosaic as a centerpiece of that, they're going to have conversations around sell side having that capability and talking to their clients about, what they've gained, what insight they've gained from, seeing these market moves and getting more analysis around it. They're going to be smarter with their clients between sell side and buy side on their patterns. I think, when you talk about data analysis, we have to talk about CRMs. They're going to get also smarter by, knowing, the trading patterns of clients, knowing the holdings of clients, and being able to just have more efficient conversations with them, identifying areas that are, important to talk about based upon, all this data, not just the market data, but the data about their clients.
Yeah, and so we have a question up here, right, to see what data people find sort of will be the most valuable in the next couple of years. You're right. I mean, client trading history, but that's another, it's funny how it takes us back to analytics and AI. Is taking better care of clients today also means, getting more actionable insights driven from the data to then sometimes pick up the phone and call and say, hey, this is what we're thinking. This is what the data tells us. It's a little bit like the financial services version of Amazon saying, hey, this is what you should buy next. Right. Yep, but I think there's still a case. There's some cases in finance where that data can be sort of transmitted automatically or electronically. But, when we're talking about, millions or billions of dollars at stake, a conversation armed with that analytics can really be the best way forward.
Yeah, no question about that. So this is an interesting one because we, when we did the survey back in April, there was an overwhelming view in favor of one of these. I don't want to sort of, trick this poll, so we'll wait and see as as people are participating in it. So, well, I mean, if we see alt data start stepping up here,
it is still
interesting though.
It is, and I wonder if this is sort of a reaction to the current market conditions, right?
Oh, exactly.
But and then that's the other interesting thing about alternative data, right? Which we haven't talked about a lot yet. Is it's sort of increasingly feeling less alternative, right? There's certainly going to be new data sets where we find new ways to use them, but the moment for me was about a year ago when I realized that my sort of my personal brokerage app right up on the front screen said, here's the top 5 stocks from social media sentiment. The fact that alternative data sort of found its way all the way out sort of to sort of that retail end consumer means it's not that alternative anymore, right?
Yeah, that's exactly right. Alternative data will at one point, as it develops, evolve into just commoditized data. I think one thing that I just, once again, putting in perspective, and as I think about alternative data compared to just the broader market data environment or market data business, I think one of our, statistics, as we do a lot of research on the size of the market, is that the market data industry is a $34 billion industry. And I think your estimates on the size of the alternative data sort of market is around 300 million. So once again, just comparing the two, you can see how, the rest of the data, whether it's consolidated, aggregated, direct feeds, news, content, all of the above, really, really alternative data is dwarfed by all of that.
Sure. And I'm realizing we have a lot of great questions from the audience. I'm going to inject one here because we've been talking a lot about automation versus humans. Do you feel like every financial market in all asset classes should go electronic? And what are some of the exceptions of where you think there still should really be that human touch?
Yeah, no, I don't believe so. I mean, there are a lot of structured products, more complex derivatives, things that really are about, cross-asset, trading. I don't think a lot of that will go electronic, nor do I think it needs to. I think, the point that we see about automation, machines, humans is really more about, augmenting and allowing traders to really focus on, the real value add, which really comes to much more of the larger block trades, illiquid trades, structured type products. I don't think it will ever go away that, you need that human touch in all of these.
Yeah, I know. I agree with you. I'm going to put this poll up sort of as I keep talking. But yeah, one of the things as electronic trading has pretty rapidly expanded over the last decade. I think one thing that we're seeing now is sort of the next 10 years. Market electronification will look a lot different than the previous 20, right? It's not simply about making everything look like the equity markets or broadening the use of the request for quote model. It'll be something new, right? There are, as you said, very illiquid instruments, very bespoke instruments that don't work well in those kind of traditional environments. But technology does exist today to still help sort of buyers and sellers find each other and negotiate on terms, but to do it in a very sort of online, auditable way, right? That takes out a lot of the the risk in double keying or recorded phone conversations or whatever the case may be, right? I mean, I still remember, right, with swaps back in the 2000s, right? There was like the fax backlog of confirmations that caused a big problem, right? So obviously we've come a long way from that, even though a lot of those markets are still, not fully electronic.
Yeah, and I think, once again, everything blurs, right? I mean, you can get on the phone with somebody and that phone call itself can turn into an electronic trade, especially on the confirmation side, where you have, a chat going on with somebody and you can turn that into a trade, even though it's being negotiated, through a chat. So, it's just, once again, I mean, I'm just so fascinated, over the years, how quickly things have changed. Many years back, I was a chain trader, and I was, we were one of the first to start embracing, Reuters 2000 back then, where it really was going out and, doing RFQs, but very manually, but on a terminal. And it's just amazing to see how the advancements there. So, are you worried that technology in some form will? Yeah, no. I mean, this is very consistent with what we've seen as well. I mean, when we did this back in April.
Yeah, I think that's right. And I think, for those that are worried, right, there's some level of, thinking about, how can I embrace technology to help, automate the parts of the job that maybe are a bit manual or labor intensive or monotonous for that matter. And then what else can I do, right? Where else can I add value? How else can I focus, right? So I'm in the research business, right? So, the more we can use technology to gather data, to process data, to put analytics in front of us, I mean, even in some cases, right, the technology that takes, sports box scores and turns them into very short news stories, right, without a person touching them. That allows those sports reporters to spend more time doing deep dives into other elements of the game. And I think, it's the same thing for us in the research business. So trying to embrace it, not fight it, and then help it to, push your career and then, your job and company forward. But, I think that was right. So that was one of the main findings, though. You're right, is despite, or not despite, but sort of alongside the growth of technology, there is still a big human element. This is still a people market. The way markets interact and buyers and sellers interact really is still, right, driven by people. They're just people that are much more supported by technology than they ever were.
Yes. Look, I mean, one of the statistics I also recently read is that, I mean, there have been over 1 million new jobs in financial services, over the past 10 years since the really right after the crisis in 2008. I mean, that's phenomenal. So, I mean, to the point, humans don't seem to be going away. I think they're just focusing on things that are making them, more insightful and smarter because of technology.
Yeah.
We held a workshop back in, I think it was about 1.5 years ago, where we invited a number of our sell-side clients to. We held it in London. And we found, just through the polling and through the panel discussions, that they also weren't feeling that their humans were going away. There were a sort of a different sort of allocation of skills that they were looking at, while the traders themselves are going to get more efficient, and the salespeople are going to be better at being able to reach out through technology to many more clients. So there's a big product side that they look at technology doing. But they also felt that, the roles of quants and data analysts were growing in these firms. So, it was, once again, this is what's going on. And, we just continue to focus on how do we serve, this client base, as, technology is vastly changing how they operate and what their workflows are going to be.
For sure. And you can see, right, so in this, so this, sort of top sort of 9 finding, 80% feel technology innovation has presented them with new opportunities. I can't help but think about, in particular, it feels like over the last, say, 5 to 7 years, the number of trading desk heads or traders that have made a career switch into fintech, right? That are either founding, fintech companies, taking senior roles, right? You guys are a great example. Refinitiv, lots of sort of, previously sort of very senior traders that are now helping to build the systems out and work with customers. I can't imagine most of those folks, as they were going through college and looking to get jobs at big banks and asset managers, that they ever would have thought they would be in a tech job. But the world has changed, right? It's really amazing how that transformation has played out.
Absolutely. So why don't we go, because we want to leave some more time for Q&A. Let's go to the next poll, because I think this is going to be interesting, and I think it's really going to help shed some light on, the current environment we're in, and how people are thinking about what's most important to them in this current environment. So maybe people can start.
Yeah. So, right. So, what's been most important for managing your desk in the current environment, work from home, right? Is it sort of, home access to the trading solutions, feeling comfortable and confident about the data, or keeping in touch with clients? And we've made this hard, right? Because you can't select all. So it's trying to pick the top priority here. It's funny, again, do we put this on you, Michael? I'll put you on the spot, right? Like you obviously have a big set of important clients you need to, make sure that they're up and running, but then you also have your own business to run. So what has that transition been like into your home office?
Oh, wow. Thank goodness the internet has held up for us. We did have a little outage yesterday. I was freaking out because I was like, oh my gosh, if we have that outage today and we're doing this webinar, it was going to be, so yeah, I mean, to that point, yeah, the dependency we have on just our own connectivity and internet and bandwidth usage and all of that has just been crazy. I've gotten a lot of advice also on just being able to, need to step away from the computer. And I think what's interesting, we do have our client meetings. We are keeping these as much as we can, to no more than 45 minutes. I think, the intensity, of doing this virtual, office environment and how you work with both your colleagues and clients is just very different. So, yeah, it's an experience that I hope we only have once in our lives.
It is, but inevitably will change things. I think, it should be for the best, right? Certainly people, like I said, we keep talking about human nature, right? We'll want to get back to the office and be able to socialize and have that natural interaction. But then, I think it'll keep, it should over the long run keep every company more productive, in that people can be, sort of where they feel they're most efficient, right? And maybe that's home, maybe that's in a Starbucks, but, the fact that people feel now that they really can work from anywhere, should help. And so look here, the data wins the day, right? Which the audience gave us a softball to cap off this webinar, didn't they?
Yeah, no, I think, it really is about data. And what's interesting and just, why I care about it is for all the reasons that I think we've been talking about. But, within Refinitiv, the real-time data business, the infrastructure for our clients, all are part of our trading business, because I think that's really, once again, further sort of, confirmation from us as we talk to clients, as we think about how we deliver and sell our solutions and what clients want to buy from us. They really do want to think about the entire front to back when they're looking at, what they need for their trading business, whether it is then, the desktop, the pre-trade capabilities, the visualization, the actual trading solutions that we offer, but then underlying there is really the data that, powers all of this. So the real-time data business sits within trading. And I think, once again, that's because we see this all sort of, connected and exactly how our clients are talking to us when they think about, what they need for their trading business.
For sure, right. And in the end, it's all the technology is about bringing efficiency to the process, right? It's not intended to replace people. It's intended to make people more efficient. And I think that's exactly what we're seeing. And so we are just about out of time, but we do have a few questions. So we have actually a lot of questions. Let me see if I can pick one or two of them. So I think this was pretty interesting. And I'll read it verbatim. I am a very technical trader, dealer. I only use fundamental analysis and timing. But I'm starting to find behavioral finance very beneficial. How do you feel this would play a part in the future of the trading desk? Right? It's interesting, right? It's a combination of, again, human intuition and why do people react the way they do. But then, is there enough data available to systematize that, right? To use artificial intelligence to think about, people's behaviors and what they are and what they might mean.
Yeah, that's interesting because, the generational change that is going to enter the trading, businesses, it's, the game theory part that I used to play years ago as a trader is potentially going away as things get smarter, as you start predicting how people are behaving, or you actually, get on the phone with them or talk to them. It's very interesting.
Yeah, no, for sure. And then so one last question, and then I think we'll have to call it. So we'll do a career question to wrap it up. So it's a question that, do you think, and this one says specifically, do you think degrees like an MFE, so masters in finance or engineering or analytics, do you think those sort of postgraduate degree or those graduate degrees, do you think those are beneficial? It's a good question for you, Mike, because you're somebody who sort of hires a lot and probably sees a lot of resumes. So what do you think the value is for folks that are starting to come into the industry now?
I think it's once again demonstrating that you bring something different to the table. Yes, of course, having backgrounds in finance, in economics, in technology are so important, but not the only thing. So, we get, I get a lot of CVs coming my way, and I'm always looking for that thing that makes somebody unique and different. Now, I know that sounds pretty generic, but that's really what it is, at least for me.
Yeah. It sounds like the degrees can maybe help you get you in the door slightly, but in the end, you're right. You're going to hire the person who's passionate and unique, and most suited to the role, regardless of exactly where they went to school or what the GPA was.
Absolutely.
All right, fantastic, good. Well, I think we are just about out of time, so I think I'll hand it back to Trish to close us out. But Mike, great talking to you. Glad you're well. Thanks for all the insights today.
Yeah. No, thank you for your partnership.
For sure.
Thanks, guys. That was terrific. Thank you, Mike and Kevin. It was a really informative hour. This completes the webinar. We'd like to thank all of our viewers and joiners for making time for us today. As a reminder, we will email the webinar recording and the slide deck to all registrants and attendees. You should also see a survey pop up shortly. If you could please complete this very short survey and give us your thoughts. We'd love to hear your feedback. Please stay tuned for future webcasts from our team here at Refinitiv and our partners. Thanks again for joining us, and have a great day.
Oh, yeah, and one last thing before we end.
Sure.
You know, there were a number of questions, of course, that Kevin and I were not able to answer during the time. So we will get these questions. Kevin and I will work together and really try to be able to respond to them.
Absolutely.
Terrific. Thanks, Mike. Thanks, guys.
Okay.
All right. Thank you.
Thank you all. Thanks everybody.
All right.
Stay safe. Take care.
Yep. Stay healthy.
Bye.
All right. We're out.
Okay.
I
We're done?
think we're out.
Cool.
Kevin, I think it was better for you to drive. That was a little muddled at first. I apologize.
No, yeah, it was fine.